to choosing who to learn from in this industry. It's largely populated with less than savory characters. So anyway, let's get on with it. Welcome to our Trading Week Ahead broadcast. I'm Ken Calhoun coming at you live here on Saturday, July 27th. We're on air. As always, all information is for educational use only. I'm Ken. So let's go ahead and get on with it. What's going on with the stock market? Well, we're up at new highs, and that's good for a few reasons. The first is it's likely to attract new institutional buyers. Now, one thing that I found really valuable, at least in my own trades, is to keep a real keen eye on our industry groups. And you can see, for example, the two top sectors are gold and semiconductors. Semiconductors had softened up for a while, but they've been roaring back here the last couple of months, right? Really good, strong upside. This is the 3-month Philly semiconductor SOX chart. What I want you to think about doing, if you're going to be on the right side of your trades, make sure that you're trading within industry groups or sectors that are the strongest accumulation or the strongest bought up sectors that people or institutional traders are putting money into. You can see our stocks has gone up nicely. So I like trading instruments like Micron and AMD and others that are in that sector because it's a strong growth sector that's attracting new buyers with a lot of new volatility. Another good sector obviously has been the gold sector. Here's our XAU sector 3-month chart, and you can see it's gone up sharply. It's slowed down a little bit here lately, the last week. So what does this tell you as a gold trader? We've been gold traders back during the run-up, but what does this tell you if you're trading gold instruments? Personally, I would tighten up, again, not trading recommendations, but tighten up trailing stops on any open long gold positions because this looks like a potential exhaustion. We've got a doji. They're uncertain. They want to buy. Then they want to sell. They want to sell some more. Look at the ratio of green to red candles in the gold sector chart. Again, you don't learn this anywhere else except copycat competitors that try and copy me, but I'm the original. I develop a lot of the techniques that are then used in industry. The ratio of green to red candles is dominantly bearish. We've got 5 reds, 5 out of 6 candles are red in the gold sector. So yes, gold's had a nice run up. It's been plagued by a lot of profit taking. We haven't dropped back down sharply, but because we've gone up sharply, and it's made a lot of money for a lot of people, right? I don't know how many of you are also trading gold ETFs or gold stocks, as I've been mentioning to you guys the last couple of months, but now is a good time to take profit, or at least tighten up trailing stops. It's very unusual for gold and the stock market to run up together. Usually they're inversely correlated, right? So with this weakness in the gold sector, or failure to continue to new highs in the gold sector chart, might be time to stick a fork in it. Take profit out of any gold stocks that you're in right now is probably a smart idea. Semiconductors, the other main industry group or sector of interest. A nice sharp move up here. Kind of slowed down here near the 1600, but overall it's a good uptrend continuation. So semiconductor stocks, whether, and this is one we're going to cover in swing scans for my members coming up in about 25 minutes, but Micron has been one that I've called successfully many times for both day and swing trading in my live room and my swing scans alerts. So things like Micron make sense. But what's a red flag here? What's a red flag in price up here? You may have seen my articles. One thing that you want to do is always sell a 9 or something right under a 9. So Micron looks good here, but it may be getting to a late cycle exhaustion because it's been going up so long, and it's right near a 9, right near the decade value of 50. So it may exhaust off and pull back right now. So if you're long MU, now would be a good time to tighten the trailing stop. And I'm curious, an audience participation exercise. If you were long Micron, like so many of my traders, where would you trail a stop? Traders have been thrilled to learn with me because my calls kick Wall Street's ass. I crush Wall Street. I do really good with my alerts. If you follow my alerts, or even these free events over the last 6 years, you've seen how many winning alerts I post. But the trick is in this market is to take profit before the market takes it back. So what you don't want to do is be long here and then sit on your twiddle your thumbs and then come back in a week and Micron's back down at 40 and you're going, dope, I should have sold. Where would you trail a stop on an open swing trade in Micron right now? I'm very curious. Type in your answer. I know a few of you like Mira and Mukesh will get it right, but how about the rest of y'all? Where would you trail a stop on a swing? Hey, good for you, Glenn. Glenn said close it yesterday. I'll look for re-entry late Monday or Tuesday. That's a smart tip, by the way. That's a good point you said. Late Monday. That's very intelligent. You don't want to buy new swing trades on a Monday morning. Usually the later in the day on Monday or Tuesday or Wednesday morning. But that's smart, yeah. I always look at adjusting my swing trades. So many winners I've had so much lately. So much money. It's wonderful. But the point is, do maintenance work on your swing trades, meaning figuring out whether you want to add more shares or take shares off, go back to cash during the late portion of the day from 3:30 to 4, right? That's your maintenance window. I call it maintenance because that's what I do with open trades that I'm in, whether they're in the money or they're sideways or they're against me. Do I want to go to cash and cash out those shares for a profit or break even or a stop? Or do I want to buy some more? And oftentimes I will add to my current swing trades between 3:30 and 4. But anyway, trailing stop values. I'm seeing 46.8, 49.7, 47.20, 46.50, 46, 46.8, 40. Dozens and dozens, and they're scrolling by here all over the place. At least you guys are all north of 46, so that's good. Yeah, every single answer is over 46. That's good. I would just say any loss of the 47. So personally, I would use like 46.80, 46.7. But you guys are all right. 46.50 is smart. That's fine. Anywhere north of 46 would make sense. But 46.50 to 46 to the 47, that's a good place to tighten in a trailing stop. It's always it illustrates one of the techniques that my favorites that I trade myself all the time is kind of hit and run trading. You get into a trade, it works out, you take a quick profit, maybe not a huge profit, but it adds up over time. I mean, think of all the winning trades you can make. You want it to, hit a lot of base hits, not go for home runs. So let's say you got in at, say, one of my alerts, say you bought over 42, say you bought here. Buying at 42 or 43 and then selling at 46, 46 and a half is fine. A 3 or 4 point run is just fine. You don't need to try and wait for 15 points or something. 3 and 4 point winners on swing trades is perfect, combined with stop losses of no more than $2 per share. Make sure from a risk management standpoint for swing trades, don't let it bite you more than a couple of points, 1.5 points or 2 at the most. So for example, if you got in at say 42, your initial stop would be maximum of 40. That never hit, it kept running up. See a couple of red candles, not enough to get me too nervous, but I would sell it all if it lost to 47. So does that help, those type of trade management ideas? Or let's say you're day trading Uber yesterday. And this guy was a really nice run up. One of the quick strategies that I've told traders in my live room all the time is we always 100% of the time sell, so we always sell the nines, right? So if you get up to right under a whole number, always sell, at a 0.9. And like one of the traders said correctly, is you can then re-enter later if it goes up later. Usually it won't. I found that with so many thousands of trades I've done the last few months, selling a 0.8 or 0.9 within a whole number region is extremely intelligent. So if you put on the trade somewhere north of 44 and you sell the 44.80, that's fine. You don't have to get the top or anything like that, but do expect that things will exhaust off near new highs, near whole numbers. So trading within those whole number resistance regions makes a lot of sense as well. And one thing I've noticed is that the ETFs have had alternating long and short days. And if you're looking for new trade setups, let's take a look at a couple of charts here. Let's say you're looking at an uptrending chart like this guy, ENPH. This is one that I'd alerted folks to earlier, and it's ran all the way up to just under the whole number. But there's a hiccup, right? There's a bearish engulfment. A bearish engulfment, and that led to not additional selling, but it's put a damper on new high breakouts. When it comes to setting your entry triggers, a very simple directional volatility based approach is to go in long at anywhere from 20 to 50 cents or so above the nearest whole number. So for ENPH, the earliest that I would go long on a swing trade would be over 22.20, because I'd be a skeptic of it continuing to run up sharply based on the size of this red candle. It's yet another technique to look for. There's so many hundreds of tips and strategies I could share with you. 20 years of full-time trading experience. But look for the, when you see the largest candle on the whole chart, is it green or red lately? And if you see a big red, this is the biggest height candle on the entire chart, and it's a red one, that may mean that that's the top of the chart, at least for now. So for that reason, you would not want to buy between, or at least I'm not going to buy between 21 and 22. I'd wait till it breaks over 22. Or if I'm looking at a small cap gold like AGI, this is one that my small cap scans members were alerted to earlier. And it's a really nice pattern too, but yet, just like the XAU, the gold index, we've got more red than green candles, and that occurs, again, right near a 0.9 level. So 4 out of 5 recent candles are colored red, so that means that I would not be buying this until it takes out new highs above the whole number. This would be a good time to sell any open gold. So that's a quick tip, is not a trading recommendation, but at least what I look to do personally is lighten up on any gold positions or use tight trailing stops right now, because they may be due for a pullback or a rollover. It'll be interesting to see where they go next week. We'll come back and visit next week and see where we say. Let's see a question. Oh, hey, Jeff. No, thanks for the email. Appreciate that about the. Yeah, I thought you might like that. The planes, the pilot. We're normal stop before tightening it up. Maximum initial stops are $2 for swing trades and 40 cents for intraday trades. For stocks between, say $15 and $40, $50 a share. For stocks like this, initial swings are usually 50 cents or so beneath support. So, or the nearest 50 cent. For the cheap stocks and the ETFs, use the nearest 50 cent and whole numbers as key support and resistance areas. So this guy, I would be a seller if it lost 650. I'd be a buyer if it got over 7. And in the meantime, I would stay clear, because it's pulling back with more reds than greens. So good trade setup. Well, thanks. Appreciate all the words. What else do we have? I'm going to see if there's any other quick tips here for you. I think that's about it. One thing I had mentioned is make sure that in your own trading battles, and you're looking for trade setups, and if you're like me, if you're a badass trader, right? I'm an alpha guy, right? I play tenor sax. I like the hardware. Anyway, make sure that you have the kind of like the mental courage and the discipline to keep really tight stops, but then in the back of your mind, re-enter if it does ultimately keep going up. That's a much smarter approach based on 20 years plus of full-time trading experience than taking large stops and taking a few Hail Mary passes and trying to throw a 40-yard pass. It's much better to do a quick rushing game in our current market. So also make sure you've got the right equipment, right? Make sure you've got great charting software. Don't try and skimp and use cheap or free charts or whatever. Make sure you've got the right equipment. Don't bring a knife to the gunfight. Make sure you got the attitude that you're going to make it. If you're going to make it as a trader, you've got to be trained with the right strategies, and that's where I come in. I like to teach y'all how to do this the right way. So make sure your pre-flight checklist keeps you out of trouble. You check charts and industry groups that are attracting new buyers lately, right? Don't trade in out groups. For example, a lot of my new traders, they get in trouble because they're trading in sectors they shouldn't be. Like biotechs have been pretty horrible lately. It's kind of up and down. But the last 3 weeks, the last almost a month, our biotechs have been bad, right? And if you're looking for trade setups that make sense, you've got to start by looking at industry groups that have strength, not weakness, right? Like here's the NASDAQ biotech. That's a horrible chart. Therefore, all biotech stocks, not all of them are horrible, but it's probably, you'd be better served by trading within newly breaking out sectors, whether it's continuous moves in gold if it ever comes back up to new highs, or semiconductors where you've got good relative strength. So, where traders get in trouble is they trade their favorite instruments in offbeat sectors. There's a mismatch, there's a disconnect. If you're trading your favorite stocks, but in a sector that the rest of the world is selling, you're going to have a tough time of it. So I'd encourage you to keep it simple, keep it focused, and trade smart. Looks like our numbers are still holding steady here. What kind of charts do we cover? There's so many good charts out there to work with. One thing that I am going to be covering for my Swing Scans members, and for you folks on occasion too, is not only social media, but some of the pot stock sector. And we're going to be looking at expanded focus on the cannabis sector. Again, Forbes and all these other places are saying it's the best sector to be. I'm not convinced yet. I think big picture, long term, yes, but short term, all the pot stocks are down. It may be a good time though. For example, I think one of my favorites is, Canopy Growth, CGC. It's sold down sharply. Lately, it's dropped a bit. But big picture, you see these charts like CGC, or CRON. Come on. Or Tilray. They've had this enormous volatility, and there's a lot of them to cover. You're going to get in trouble though if you're not trading them the right way. So for more on cannabis stock coverage, be sure to join my Swing Scans or the All Access Pass, and I'll be covering these and more moving forward as well. So markets have been extremely strong. Let's stay focused on the next play. All right, I'm going to wrap up. I think I'm done talking here. Hope that helps, gives you some quick roundup on some of the types of stocks that we're looking at, some of the types of market internals, and also some of the trading strategies from one real trader to another. I want to give you folks some heads up on what to do. So hope that helps out. If it's your first time, welcome aboard. If it's not, welcome back. And I'm going to wrap up. I've got Swing Scans coming up in a few minutes. Hey, thanks, Dave. Thanks, Bill. And best Saturday morning again. Oregon's asking, why do I have half a dozen pot stock domains when I make a signal service? Yeah, basically I'm going to bake in my top 3 picks each week as part of Swing Scans, effective this week. It's in the members area right now. If you're a Swing Scans member, I've got my top picks. So yeah, the domains, I'm not sure what I'm going to do with the domain. Actually, the domains, I want to create an authority site for SEO. So I'm going to develop a site that has things like updated charts and quick tips and strategies. And then for the alerts, that's a members thing, but it's going to be a free content page, a free content site with what's going on lately. Keep it quick and focused. And then if people want alerts, they can join one of my services for that. So, hey, Glenn, say, let's see, you should have you're on the list, Glenn, so I remember your name, so you do have access to Swing Scans. Just remember to, so GoToWebinar would have sent you the link. Be sure to check your spam and trash folders too. But yeah, you do have access to Swing Scans this morning. I remember your name. Anyway, and that's one thing I found with email a lot is, nowadays it's another, just a quick general tip. Be sure to double check your spam and trash folders, because now more than ever, I've seen a lot of emails getting filtered incorrectly. So emails are a challenge. But yeah, you do have access. And even if you can't get in this morning, for any of the premium webinars that you folks are subscribed to, if you don't see your webinar the day ahead of time, contact me. Not like right now, because I've only got a minute or two. Or maybe actually, if you send me a support ticket, Glenn, I'll try and get you your direct link. But contact me at least 12 hours before the start of the webinar, because with so many traders, it's kind of a scramble if I'm doing it last second here. But yeah, you should have access. Phil's asking, what are the results of the cannabis site name? I had dozens and dozens of them, so I'll tabulate those later. All your comments are put in like a Excel spreadsheet report that I download and look at later. So I appreciate that. But I'll let you know next week. I appreciate that. Hey, thanks, Andy. Saying Ken, thanks for the great info from Canada. Hey, Jeff, you should have access to the Swing Scans webinar. I think that's about it. And again, for if you are a Swing Scans, I don't think you're a member, Jeff, but if you're a member, then you should have access. But anyway, if you're a member for the Swing Scans, and if you don't see your email the day ahead of time, because in GoToWebinar, I've got it set up to send 24 hours ahead of time and like an hour or two ahead of time as well. So if you don't see one of those, let me know the day before. And if you can't get into any webinar, I do record them, and the recording will be in the members area either later today or early tomorrow morning. So I got you covered. So thanks to all of you for being here. I do appreciate it. The honest training. If you're not yet a member of the All Access Pass, you might want to try that. TradeMastery.com All Access. So anyway, trade smart. Let's go get them, and I'll see you guys next time. And that's TradeMastery.com/all access. That gives you access to 6 webinars a week with me. Our live room 5 days a week, Monday through Friday, and then Swing Scans at 10:30, which is coming up in just a couple of minutes. So y'all have been amazing. Get out there and make some money. Stop taking stop losses that are ridiculous. Make your stop losses as cheap and inexpensive as possible. And if you're still losing more money than you're making in our current market, I don't know what to tell you. Make sure you've got the right training and the right alerts. Follow join my services. Try them out for a while. Let's see how well they work. Try out my free stuff like I teach you guys here every Saturday. Test out my free content like what I covered for you today, and then join the premium events for much more in-depth detailed training as well. So anyway, take care, folks, and I will see you guys next time. I'm going to wrap up. Bye for now.